Hello and welcome to Pro Trader Strategies Market Commentary for Thursday, February the 16th. My name is Eric Wilkinson. Some of you may recognize me as the Wolfman from CNBC, Fox Business, or even the Wall Street Journal for my commentary on everything from economic to geopolitical and market analysis. Please keep in mind that everything that we talk about in these daily market commentaries is not a solicitation to buy or sell any of these securities or strategies. At the end of the day, we're here to teach you some different strategies that you can implement into your portfolios, but please do that in your own way. The reason why I can't give you a recommendation on a particular stock or strategy is because I don't know your risk parameters. I don't know what's in your portfolios, and therefore what I'm doing could be counterintuitive to what you are already doing. Having that out of the way, let's get this on. Not a whole lot of economic data across the pond, but here in the United States, we got building permits, came in at a little bit higher than expected at 1.29 million permits pulled. Now, keep in mind, pulling a permit doesn't necessarily mean that you are going to build. That, to me, is a little bit of a wanky number, but it is, anytime it's higher, it's the expectation that there might be building going on. Then we also got Philly Fed Manufacturing Index knocking it out of the park. Hit it out of the park, came in at 43.3, was expected to be 18.5, so just a huge number to the upside. Housing starts came in at 1.25 million units versus the expected 1.23 million units, so better than expected there. And we also got natural gas storages came in at a drawdown of less than expected of 1.13 billion cubic feet versus the expected drawdown of 1.30 billion cubic feet, 130 billion cubic feet. We also have Trump speaking in about 45 minutes, half an hour, 45 minutes. So that could stir things up. And then no real economic data tomorrow at all here in the United States. We will get retail sales out of Germany or Great Britain, but that's about it. On to the overall markets. Well, one thing about the economic data that we've been seeing has been pretty good. So Janet Yellen probably on point with the consistent raise on interest rates. Is that going to affect the overall mood of the market being at historical highs? Yes, you would expect it to maybe continue up, but is that the point of capitulation and a downturn in the economy as the equities throw a tantrum about interest rates increasing, so and slowing down maybe the economy in a sense? But anyway, we're at the crude oil right here, down about a quarter on the day. We still have that massive historical build and stock in inventory. We're below that value area high. It keeps trying to pop above this value area high here and failing and settling below that. So that's signaling a bit of bearishness to me. So we'll have to see how that goes further on. Then yesterday we got gold to actually settle above the 200-day moving average. This pushing higher. We're seeing like gold bonds moving higher as the equities are just slightly off on the day, but could be signaling a bit of rotation or flight to quality in a sense where people take money out, take profits on the stocks, put it somewhere in a safe haven like bonds or gold. So we're seeing gold push higher by almost $10 today and well above that 200-day moving average. So we're starting to see this 9-day moving average cross over the 200-day moving average, which starts signaling a bit more of a bullish tone. The real bullish tone will happen when we see the 50-day moving average cross over the top of the 200-day moving average. That's a little ways off right now, but as you can see, we are consistently having higher highs and higher lows, which is a trend to the upside. So now we've kind of bottomed out here. This bottomed out at the previous high. That's a pretty strong sentiment, especially if we can get above this last tweezer top at around 1248, 1250, let's call it. That would be really pretty bullish on a settlement side to the upside. It's going to see some resistance at that area, right at that line in the sand that I have. As you can see, it acted as support here. It will act as resistance again the next time we go up to try and test that. So that is the line in the sand to get above if you are a gold bug, if you will. Bonds kind of settled down as we kind of found a bit of a bottom. We haven't really seen higher highs here. This is a tweezer top. We could start seeing like a tweezer top and this fail off. But at this point, bonds up over a point on the day. Pretty big move for the bonds. Anytime there's a point move in the bonds, that's pretty decent day. And testing that 9-day moving average, but not necessarily breaking above it and looking to settle there. So that is still going to act as resistance. So keep your eyes on that line. Now we got the Dow Jones Industrial Average, just like I said, off slightly by 17 points. It's a bit strange that we're seeing the gold and bonds really rally with this little bit of a sell-off, but we are seeing a new high intraday, not a new settlement high for the Dow Jones, but a new intraday high, and setting up for a little bit of a bearish tone. Here we got about a half back is what we used to call it on the floor, with the NASDAQ /NQ down, just over 11 points right now, but looking to take back half of yesterday's move. Would be really bearish if we had a full engulfing candle here from what happened yesterday, but still slightly bearish to at least get the radar going on a half back day where it's given up half of yesterday's gains. The E-mini S&P is starting to look more like a engulfing pattern. We'll have to again wait until the end of the day to see how this looks, but if this completely retraces yesterday's rally, that is going to be a big bearish signal for a lot of people out there. So keep your eyes on that. If we settle below yesterday's open, in a sense, that would be more of a bearish tone, with the E-mini S&Ps down $9 on the day. Got a few ticks to go before we get to there. As you can see here, this is the daily chart. Break it down on a 15-minute segment. Right here is that low of the day. So let's call it 23.27 or 37. So if it gets below this area here, that would be a full engulfing pattern. So we got about 6-7 ticks to go to the downside. Starting to see a bit of a bounce here today, but again, this value area low should start acting as a resistance. Once it fills in here, we could see this line pop down and match up with yesterday's, and that would be another signal for that engulfing type pattern. So keep your eyes out for those kind of things as signals of a turnaround here. Bristol Myers, BMY is the ticker symbol, has pretty high implied volatility, as you can see, even after the overall, after we got that binary event, we got that volatility crush, but now we're starting to see some spike in there. Now that it's turned over today, we're starting to see some of that volatility come out. I decided to take advantage of that situation with getting some short deltas into my portfolio. So I added some short calls in here, and I went up a little bit further, right around the 60 area. I felt like that would act like a little bit more of a resistance. Did look at the 57.5 calls, but that could easily get retraced rather soon. But if I can get above this area here with the collection of my premium, that puts my break even above that line, which I think is going to act as resistance to the upside. So I went into BMY, which is the ticker symbol for Bristol Myers, and went into the March, sold the 60 calls for 65 cents in there. So add some short deltas in case we get a pullback here. Plus I'm feeling like I'm pretty safe up here. Right there's the break even for me, which is 60-65 area. So that is making me feel pretty comfortable, especially with the pullback that we're seeing in Bristol Myers today. So the only other thing that I've got on the docket for today is looking at Deere. Deere has earnings coming out tomorrow morning. There's quite a few earnings coming out this evening, but there's just really no options for those contracts that are worth playing around with. But Deere is one that I always have a tendency to play for earnings, so I'm going to be doing that. So follow me on Twitter at Wolfman's blog, because I'll probably be tweeting out what I do in this stock later on today, because I usually put this trade on late in the afternoon. If you watch my webinars on the earnings, I go through all the rules of how to set up trades for specifically just that one day binary event. I even talk about what the market maker move is for that and how you can figure that out on your own. All right. So go to protraderstrategies.com, sign up for that. And tomorrow's webinar is going to be on the broken wing broken wing put butterfly. So check that one out. Completely limit our risk to the upside. There is going to be no risk and possibly just profit if the market rallies, rather than a bound regular butterfly. So check that out. It's a really good one. If you can't take that, take it easy.